Manoj Murlidharan joining in on the technicals, Vinit Bolinjkar joining in on the fundamentals right now. Gentlemen, both of you, good to have you on the show. Vinit, just wanted to get your sense in on whether or not there are opportunities afresh within the cement pack wherein you would recommend a buy. Vinit, you'll have to unmute yourself.
So I beg your pardon. I believe that the Ambuja Group offers uh, an opportunity to enter the segment because I think over the next 3 years we are going to see some huge capacity additions. It's a large cap stock, and due to the you know the baggage around the Adani Group, it was underperforming. But tomorrow we have the hearing, and hence I expect that once the hearing is through, better sense will prevail. Investment buying will start, and I expect this stock to do well in the cement sector.
Okay, Ambuja Cement, the top pick when it comes to the cement pack. Let's just revisit the big buzzer from all through last week in BHEL and what is that stock, up to currently in trade. Still holding up 1.25%, 137 plus levels is where it's sitting on. They, of course, have seen a pickup in thermal, the efforts to foray into clean energy execution, and, of course, profitability as well is something that the street is liking as a turnaround story, and the order wins, of course, cannot be negated there as well. Vinit, within the entire cap goods space, would you continue to prefer stories like L&T, stay with the largest of them all? Or would you think the smaller ones within the PSU pack as well is something that you'd like?
So, I think I'll go with BHEL. There's a lot of momentum there. And, my optimism comes from a couple of things. Not only the business environment getting stronger, but, at the PSU level, the leadership team, there's a think tank which is putting in place very, very talented people who are being drawn in from the cadre itself, from the company itself, who have spent a lot of time. So any superannuation that happens at the senior level is being replaced by people who are well versed with the business and have shown great promise. So leadership teams are getting exalted. And if you see BHEL, it's into 5 segments. Your railways, which is booming, defense, they're into power, they're into renewable energy, and cap goods, and especially in thermal energy, where the base load is is uh, under capacity. I think with the flood of orders coming in and lack of competition, with L&T and Thermax and kind of players staying away, I think there's a very sweet spot for BHEL to build on this story. So, if you were to just consider 140 as a long-term resistance level, once it breaks out over there, I think the momentum will carry this trade into next year. Targets are around 180, 200, and possibly higher as the new addition in order book starts flowing in.
Okay, so 180 to 200, that's the kind of levels that you're watching out for BHEL. Quite a bit of breakout is what we have seen there. But we've seen breakout on Nifty itself and the whole market as well. Manoj Murlidharan is also there with us on the show to talk to us about the technicals. Manoj, we were just speaking with another technical analyst, Rahul Sharma of JM Financial, and he's talking about how there could be a 1,000-point rally on the Nifty in the month of September itself. If not a 1,000-point rally, at least are you expecting a big breakout, maybe 20,000 levels?
Yeah, good afternoon. So I look more from the derivative perspective, not from the technical side. So there is a lot of quantitative and FIR data that comes into this place. So what happened is this month when we started the September series, the Nifty was lesser by almost 17 odd lakhs because August started with almost 1 crore 17 lakhs and we were almost at 1 crore for September. Now the good part is this lesser position in the September series is because there was some long unwinding because I guess August was the first month where month on month the Nifty was almost a 400 odd point negative. I believe 19,650 was the previous expiry and then we had 19,250. So the short rolls which was happening from the FIR desk, we have seen that coming in and the FIR started with almost 50% long. So just shorting 50% of it, and the most important thing, there is a ratio analysis that goes between the banking and the Nifty. So the bank Nifty and Nifty is at a ratio of 2.28, and every time, even last time, if you remember, I guess it was almost 35-40 days before, when we came to this ratio, the bank Nifty gave a good surge of almost 22 to 2500 odd points. Now, banking and financials is almost 35% of your Nifty, and with lesser short rolls that we have seen month on month, we believe yes, there is possibility, but like you said, the 1,000 odd point, that is just a statistical observation, because if you see almost 10 years down the line, every time September happens to be a positive month. The first thing we would see is a 19,650 on the spot. Now that happens to be the weighted average price of almost the last 80 to 100 days. That is almost 2.5 months of expiry, where the short rolls from the FIR desk is happening, because they're selling in the cash market. So there is some type of reverse arbitrage which is going on. So if we close about that, and in even today's case, if you see the Nifty is added almost 2.5%, so that is a positive indication, and a fresh addition of almost 2.5% after a short covering certainly opens gate. But as of now, I believe that 19,700 to 800, that might be the target. If we see further fresh longs, yes, there is a possibility of 20,200, which might be in the offing.
Higher levels is what Manoj is foreseeing on the charts. But the Nifty could rally 1,000 points within a month. That's the word coming in from Rahul Sharma as well. He also expects the PSU banks to perform very well in the coming months. Let's hear out his opinion.
Or the PSU bank index, which has held on very well in this entire correction and seems ready for another round of up move. On the other side, you have private banks which saw profit booking in this last few weeks. So my sense is private banks may take a backseat, may see a small bounce back here and there, but PSU banks should actually do good from here. So that puts up around 60 to 65% of the Nifty in a rather sweet zone, which after this consolidation, especially since we've crossed the 20-day moving average on Friday and closed well above that, the chances of the Nifty heading towards the 20,400 mark in the month of September seems very high. So yes, we are calling in for a 1,000-point rally in the month of September. 19,230 is the last blow that the bears could manage, and which was sort of not successful. So that should act as a base for this month, and we should very well be headed towards 19,800, 20,000 and above in the coming few weeks.
That's the view coming in. 1,000-point rally, 20,400 as soon as the month of September itself. But Vinit, I wanted your take regarding Jio Financial Services. We are talking about how the value discovery can happen on this one now, given the fact the entire passive flows and the entire circuit revisions, etc. have happened. Where do you see the fair value of this one?
See, right now, it's just the inception of the business, and to build traction and build credit growth and all is going to take time. So, it's very difficult to assign a fair value to the business until we do not get any hearings on, what is the growth path going to be. But having said that, I would like to draw your point to some qualitative aspects of the business. As I've said earlier also on your other shows, is that the kind of data that they have, and they know the usage pattern of the individual users. I think they can tailor-made solutions for all these individuals and really build a very, very high data-centric, lending portfolio, which will be the envy of all the other players. They do not have any cost of acquisition. It will be cheaper because they already have the data. They have to only mine it. And when you, on the supply side, when you tie up with the best in the world as businesses, like you have tied up with BlackRock for AMCs, and we'll see a couple of announcements coming for the insurance JVs. Okay, I believe that we are going to build a formidable platform, which will be the envy of the entire NBFC space as such. So I would not put a fair value to this stock, but just purely based on the quality of its database and its modes, I would consider this to be a long-term buy.
Interesting. Jio Financials, that's the reading on the charts, or rather the fundamentals. Quick stock of what the market is up to. Coal India, of course, is powering up ahead well, but IT as a pack is doing extremely good as well. Look at Wipro, that staged a 4.5% move. There's TechM up 2.5%. There's HCL Technologies over a 3.5% move on the futures. Infosys is up 1.5%. TCS is looking very smart, and I guess the similar would be the picture when it comes to the mid-cap IT end as well. What with Persistent already clocking a fresh high for itself, 4.5% 5% higher for Persistent, and I think KPIT, Coforge and the likes as well still holding out in the green as we speak too. But Vinit, the other point in the market is, where is it that you profit take in the near term? Where is it that you think that, it's looking a little frothy and overvalued?
So, I would definitely look at the B group stocks, the small caps, which have seen a substantial momentum flow that has happened. I would, wherever the valuations are stretched, I would take profits out there and plow that money back into large caps, because now the rotation is going to be around the large caps.
Some large cap names. Suresh, help me do a chart check on some of these stocks which are sitting at life high levels. You have IDFC First Bank, which is 5% higher after GQG has checked into that counter. Brigade Enterprises, that stock is high around 6%, doing quite well for itself. And then from the IT pack, as we were talking about, there's Cyient, which is sitting at life high level with a gain of around 4%.
So IDFC First Bank has been in a strong trend ever since it broke out above the 50-60 levels. The stock has continued in a higher top, higher bottom formation, and out here, the best way to ride is to keep a trailing stop loss. Now, our trailing stop loss comes down to 92. So out here, the momentum is still positive, little overbought on the short-term charts, but we've seen it could continue with some bit of a pause. So 92 becomes a trailing stop loss. Brigade is interesting because the stock was in a very tight range for the last 2 months, 560 to 610. That was the range for the last 2-3 months. The stock previously had made a top around 570 back in September of last year. So a good breakout here, and say after this breakout, one would ideally expect a move towards 700, 750 levels. So still a buy on dips would be interesting to see it go towards those levels, and see if the price action continues tomorrow also. That would be a confirmation. Today is a one-day move, but any follow-up tomorrow would confirm the breakout to be done. So buy at current levels as well as on dips. Cyient is something which is overdone in the short term, so no views out there.
Views on Cyient, because that seems to be overheating a bit, Manoj. But you were talking about how the derivatives picture is stacking up. But talk to me about the various sectors. The rollovers were quite strong on the likes of cement, etc. Even IT was seeing quite a bit of momentum. Do you think anything to suggest that it's getting a bit toppish out there?
See, the concept which I would like to say here, there is a certain weightage every sector has in the derivative side, which is called as your market weightage to the entire market positioning that have. Now, cement as of now is almost 3%. Now, this metal that we are seeing right now, the rally which started almost 80, 100 days, which is 2 contracts before, it's somewhere close to May, June that we saw this rally started. That time, the weightage the metals had in the entire derivative segment was not more than 2.83%, which is as of now 5%. So yes, there is certain pockets where money has come in and the derivative weightage has come. I believe that FMCG cement still has more room. IT, though, I believe we might not really get a big move on that. Let's say for stocks like Infosys, 1480 to 1500 happens to be the resistance. So a better buy for stocks like Infosys, etc., would be closer to 1420. Cement specific, yes, there is a possibility. Now, we believe we have 2 picks, top picks from the cement. That would be JK Cement and Grasim. But I've still bought for Grasim because that's a good stock. We believe that there is more momentum at almost 1830. It becomes a buy. 1910 to 1920 should be the short-term target that we have for the September series. But apart from this, I guess 2 stocks, but there is good derivative buying and a follow-up buying might come in. One would be IRCTC. So we recommend buying this in the stock in the cash market and not really in the September future. So buy it closer to 703 to 5. The stop loss should be around 694, and we're expecting a target close to 722 to 726 on that. The second would be SBI Live. I guess the last 3 days of expiry when the rollovers were happening, SBI has seen good base formation, and that was closer to 1280. Though the stock is almost at 1320 now, it has a potential of almost 1360 as a target. The stop loss should be at least 1300 on the side.
2 stocks that I just want to bring up, maybe the year-to-date charts for. One is, of course, Reliance, and the other is HDFC Bank. Vinit, if we are looking at levels much higher than even 20,000 on the index, these 2 stocks will have to participate, right? But they've been rank underperformers and disappointments. What's your reading on RIL as well as HDFC Bank, and when one can expect a meaningful move?
So I think the negativity has been played out largely in HDFC Bank, and to my mind, if it settles down about 1600 levels, then we will see the momentum kick in. As far as Reliance is concerned, I am not very gung ho as of now, and I believe that the rally could happen with a with a beta performance by Reliance rather than any alpha being generated.
Is that alpha going to be generated, Vinit? Any top bets? Anything that you are digging out from the smaller cap universe?
So smaller cap universe, we have a few stock ideas that we like. Uh, we are gung ho on Shriram DCM. We like BHEL as I discussed earlier. Uh, and apart from this, Steel Authority of India is also good play because we believe that the commodity cycle post BRICS is going to be up only.
Okay, so those are the top recommendations coming in. DCM, Shriram, SAIL as well as BHEL, two of the public sector entities making its feature there in the top recommendations of Vinit. But what are the top recommendations and